Good afternoon. As Maurice has told you, my name is Thabo Molefe, and I have the difficult task of being Maurice's direct boss. It's a very difficult task. So this afternoon, ours is a very simple task that we've got to do. I've got a panel that I'm going to call up that's going to be working with me, but I'll tell you what it is that we're looking at and talking about. We're looking at this issue of digital transformation and how amazing it's been, particularly in Kenya, if you have to look at how far it's gone and what has happened here. The amazing things about how it's actually revolutionized how financial services, particularly digital financial services, are delivered to those underserved sectors of our populations, right? And the interesting thing as well is the role that FinTech has particularly played in bridging that financial gap that we look at. Now, you guys in Kenya are the leaders in the region. If you look at the FSD survey of 2021, says that financial inclusion at Kenya was at 84%. I think that's what they were talking about. That's what they said. That's amazing. I think you should give yourselves a round of applause, right? Now, this session, we're going to explore the pivotal role that's played by fintechs, specifically, right? And the power they have, the transformative power they've had in Kenya, right? But what we want to look at today is we want to look at the challenges they face. We want to look at the importance of institutional frameworks, you know, and how they need to be strengthened in order to be able to drive this transformation that we're talking about, and particularly when you look specifically at digital ventures. Okay, there has to be frameworks. They can't just operate without those frameworks. And also, equally important is the fact that I've got an very illustrious panel that's going to work with me here. I looked at their CVs, and they're just way too long. Those CVs. That's how amazing these people are. I'm going to call them up, and they're going to come and help us talk about this. Now, our topic is a very interesting topic. It's empowering tomorrow's economies, the intersection of fintech digital transformation in bridging financial inclusion in Kenya. Right? That's a mouthful. So it gives me pleasure to call up on stage. The first person is Mumbi Annstella. Now, Mumbi is general manager at Tala in Kenya. Her work is guided by a passion for technology. Come up. Yeah? There's only one rule. You can't sit in the center. I'm going to sit in the center. I'm told that Mumbi has... I'll read a little bit about her. She has worked in technology, startup ecosystems in emerging markets, and she's interested in how this links economic development. And she's also worked across Kenya, Rwanda, Tanzania, Ghana, South Africa, and Uganda in FinTech and EdTech. Welcome, Mumbi.
Thank you.
The next person who's going to be talking with us here is Evah Kimani. Now, Evah is Director of Partnerships and Digital at Britam Insurance Company. She's a products and partnerships expert with over 15 years experience and a strong footprint in ICT. Evah, 15 years experience. Child labor. She looks fantastic. I don't know where the 15 years went. But anyway, so one of the things that she's also done digital channels, products and marketing roles. She's worked across the telco, ICT and FSI industries, financial services industries, leading teams and portfolios responsible for building and growing new ventures and revenues, increasing revenues, customer-focused digital solutions, channels, cross-sector shared value partnerships. It goes on and on and on. Right, welcome, Evah. And then the next one is James Mugo. It says here James N. Mugo. So I think I need to say your initials in full. He's the group executive at Loop DFS. It's a FinTech subsidiary at NCBA Bank. NCBA Group PLC. Welcome, James.
Thank you.
And James and I are, I think, the only gentlemen on the stage today among these wonderful ladies here. He's got a career that spans 23 years. Solid expertise in finance, strategic management, risk assessment, guiding organizations towards sustainable growth through seamless orchestration of daily operations, staff management, and regulatory compliance. Sounds like the kind of guy you call when something's broken. And he just finds it and fixes it. Yeah? And finally, we've got Angela Mwirigi. Angela is Director, Digital Financial Services at KCB Group. Welcome, Angela. Angela is responsible for steering digital product offerings. And I like your shoes, Angela.
Yeah, thanks.
And,
I don't see why I should wear heels. I think men should wear heels.
It's interesting, you know, apparently they were designed by men. Yeah?
That's why I think they should torture themselves.
Let's take it away right there, right? So, welcome. So we're going to talk. We're going to be unpacking this very interesting topic of ours, and I'm trusting your experience and your illustrious careers to come in handy in discussing this. Now, I'm going to start with you, Angela.
Sure.
And I just want to tap into your broad experience that you've had. How would you say that customer experience and, in your experience, customer interactions and digital engagements have evolved, you know, over the years, in the way of fostering accelerated inclusion, transforming businesses, looking at how operations are changing over time? I mean, what's your view on that?
I think a lot of us were not ready for all the expectations customers had. I think one of the biggest drivers of change and expectation from the public comes from how they experience social media. So that is what people expect from us. So what we've done is that over time, as banks, you know, we were very arrogant. We sat back, we waited for you to come in, wear your best suit when you're coming, brush it off, and show up at the bank on a weekday as if you're going to work. Now it has changed completely. In fact, when we were doing research the other day, we realized that mobile banking now drives 90% of the perception of the organization. So how people judge us is based on how easy it is for them to transact mobile fast. And Kenya is a mobile fast country. There's no doubt about that. So what that has done then to all our operations is that it has changed everything we do. So we are trying to figure out how do we automate reversals? How do we ensure that the system uptime is 99.999, you know, the mythical number, because it's mythical. I have yet to see it. When we talk to all CIOs and IT, they tell us about their expectation around that number and how close they are inching towards it. But I think of it more like, you know, the way people are inching towards heaven. I'm not sure when they'll get there. We are not sure it actually exists, but we'll see. Yeah. So the change that has happened over time is that in a mobile fast economy, the expectation is the customer is now the one who is in charge. All the old days when banks knew and could expect that customers needed them, even for credit. I was fairly surprised when I was looking at some of the statistics. Of course, we say that, you know, you lend your Gen Zs and millennials at your own peril, but remember that with digital credit, it's completely democratized. There's no way to know. Yeah, I mean, you can get some statistics from the M-Pesa database, from the Airtel database. I can take some from the bank. I can take some from IPRS, you know, the government database, and get to know how old people are. But I cannot discriminate entirely on age. I have to look at income, repayment capability, willingness to pay. It's true. But, you know, it's something which you only divine after someone has borrowed and repaid a few times, which is why credit score is so important. So there is just so many moving parts, and all of them driven by how do I get to know my customer better. That's why I'm looking forward to what TransUnion can do for us in the how do I get to know my customers in the different segments with a lot better information and meet that expectation that I should function as well as Facebook or Twitter or Snapchat or whatever it is they're using now. I can't keep up.
Wow. Yeah. So it's really accelerated inclusion, right?
Absolutely.
And we have to think differently. But
absolutely. And it is irrelevant about where people are.
Yeah.
Whether they are in rural or urban, I have found youth are pretty much the same. They all want music, arts, and everything right now. Yeah. That's how they all live.
Evah, given that, and I mean, just building on what Angela's talking about here, just talk to us about the digital challenges that businesses have encountered, particularly in the different sectors. And I'm looking at things that have happened throughout the various points in the value chain. I mean, what in your experience have you observed?
Thank you. The first barrier that I've observed or that has been there is, first of all, on the customer onboarding, the first piece, which is really to onboard the customers. You realize that if you're coming from manual processes and heading into the digital, you can't really lift those very heavy processes onto the digital channels. And then you therefore have to innovate and look for ways to make that onboarding process more seamless. It has to be quick. As Angela says, these guys are very quick. They, like the presenter who came earlier, they might spend too much time on your platform and they won't onboard them. So those, how do you then make those onboarding journeys easier? And on the backdrop of that as well is the fact that we are still a financial services industry, be it insurance, be it financial services and banks. We have a lot of regulatory issues. I still have to check for AML. I still have to do the whole hog of KYC. If you narrow down into the insurance, I still have to ask you a million underwriting questions. And sometimes it's so challenging that I will put you on the digital channel, then ask you to fill a form because there are still other things that I need to do. So those are big challenges that that come about that really we have to solve for, and that's where partnerships come about and working together. The other big challenge is around, and maybe this is mostly on the insurance side, is our legacy systems. So what you see on the front end looks beautiful, but at the back end is a spaghetti kind of platform. And how do you then ensure that the customer processes are very quick while I'm still doing the spaghetti channels? And some of the things we do is work with our partners, our banks. In Britam, we're working a lot with insurtechs because we're saying that they can move up, they are more digital, they're more agile. So we are really collaborating with them to make sure that we do not bring these legacy issues to the customer forefront, so that then we can accelerate financial inclusion and insurance inclusion as well.
Wow, partnerships and collaboration. Mumbi, I want to talk to you now about, and I'll come back to you, James. I just want to ask Mumbi about the arrival of FinTechs and the impact they've had on customer acquisition and customer management. I mean, how has that changed things? And can you talk to us also about the role that alternative data has played in speeding up, financial inclusion and access to credit?
Yeah, for sure. And I usually like to give the example or the story of the digital credit industry in Kenya. So think of it as this, the inception was in 2014. Back then, if you didn't have a bank account from Angela, you couldn't access credit. But now, fast forward, it was a question of, okay, there are a lot of people, millions of Kenyans who are left out of the formal financial ecosystem. And the challenge was they didn't have any data. How do you understand how to underwrite someone who's never transacted formally? So that was the inception of companies such as Tala, and actually Mshwari, which launched about the same time. And the big innovation at the time was, how do we just open up access? As Sitoyo mentioned in the morning, one of the beautiful things that had happened in the market was the advent of M-Pesa. So that meant that we had people who were for the first time transacting in a way that was visible. And as businesses, we could be able to leverage a lot of that M-Pesa data to essentially model it into machine learning models and say, hey, I'm going to give her credit, I'm going to give him credit, and I truly can model out, ability to repay, willingness to repay, and fraud, which I know we'll talk about later. So fast forward to today, we're in a situation where we have 300 plus digital lenders, very competitive market. We've had a lot of challenges around consumer safety, and a lot of that is being addressed under CBK. So just to paint that picture of, I truly believe that a lot of the issues around access in urban centers, and please put a big caveat on urban, for urban users has been solved for. So now the next phase of the industry, which is what I think is going to be the next 10 years, is actually more about customer centricity, and we've talked about it today. Credit is still very expensive. There's issues around consumer safety that we've talked about. There's issues around fraud. So how do you start to design products that customers actually care about? and that actually address the challenges of consumers. So we're no longer in a world where you can just, create an app and put it in the Play Store and you'll be good. And I'm sure a lot of the people here who are running credit products can attest to that. You actually have to design for what the customer wants because they have options at this point. So that's sort of the picture from the customer standpoint. I think the second half of the question had to do something with acquisition.
Yeah.
I think of it as back in 2014, what was interesting was that was the first time people were truly accessing channels such as Facebook and so on and so forth. So you found a lot of acquisition for companies such as Tala was purely digital. But today, everyone and their sister has a Facebook ad. So it's a question of how do you start to think or rethink acquisition, and how we start to think about it is existing where the customer is. Because it's no longer just about putting out nice ads, but it's being present where the customer is actually transacting and being able to offer value at that point. And I'll definitely talk about that later.
Okay, thank you. James, I'm interested in your telco and banking perspective, right? And just your observations in two areas. The foundational enablers and the role that digitalization has played in promoting financial inclusion, particularly looking at younger people. You know that they're more receptive to digitally enabled solutions and processes and stuff like that. They adopt to that easily.
Thank you. Thank you, Thabo. I thought we had agreed the hard questions for Angela. Since I'm a minority.
She handled the hard questions so well that I had to find one for you.
Okay.
Yeah.
No, and thank you very much, and good afternoon, everyone. Enablers. Just when I was coming in, I was just thinking about the digital transformation that personally I've experienced. In 2005, 6, 7, when I was at Safaricom, yes, I worked at Safaricom, we used to use a word called convergence, and convergence was just an idea. And now it's really a reality. I drove through the expressway, something clicked, something deducted from my phone, I came out, and that was it. And that's the way I can say I was here in 10 minutes from my house. So when I look at foundational enablers, I have just a few, but I think everyone else has a number of them. I look at the innovators, the people who dared to dream. And just this morning, we were speaking with Fozia, and she was just reminding me how in the early days of M-Pesa, we were doing manual settlements, manual letters with a colleague of mine called Charles Omondi, and now we're talking about real-time settlements. Things like I don't know much about called APIs, and I don't know what. I think Mumbi knows those things. Yeah? But the thing is, it's now real-time settlement. And I think she misses the days when she was doing manual settlements in finance, and then she's moved on into marketing. I think the other thing is we always underestimate that word enabling environment, and I think an enabling environment for me speaks volumes from legal, the regulatory environment, the government. If they're able to just make an enabling environment, it works wonders. I don't think most of us know that, the PIN, your 4-digit PIN, first is a signature. And that signature that process of getting the PIN approved to be a signature went through almost, I don't know how many days and nights of debates in Kenya just to get that approved to be accepted as a signature as good as a signing. So when Evah is saying behind all that, she still needs someone to sign, I think she should move them onto the PIN, and that really removed a lot of paperwork. Bankers and insurance people always want you to sign. A conducive, for me, I always put it like a conducive consumer friction area. A number of us I don't know whether you can remember when the last time you queued to pay your electricity. You recall we used to queue? I used to go to Westlands to queue to pay my electricity, so it's not disconnected. Because if it's disconnected, I'll definitely sleep at Kenya Power. I won't be allowed to sleep at home. And these days, we don't even think about it. I think the other thing is technology advancement. I think we talked about USSD, now we're in apps, now Internet of Things everywhere and on the phone. So I think that, and since I need to earn my lunch, I think data, that TransUnion deals with a lot in data. I think data now, Chairman, I had your chairman, lunch. So data is the new kid on the block, and these things will always enable, in my view, the digital transformation and financial inclusion.
Good. Yeah. Good. I think you've got yourself a free pass. No more difficult questions.
Excellent.
You mentioned data. Angela, and to everybody, I mean, one of the things is, as we're driving financial inclusion, it's a double-edged sword, right? We're driving financial inclusion, we're doing so aggressively. The need and the rise of financial inclusion is leading to the increased risk of fraud. And fraudulent activity carries a cost with it, right?
Yeah.
And it's something we need to think about in terms of how do we strike the balance, where do we find the balance? But my question for you, Angela, is that what are the key threats to Kenyan businesses that you think businesses are hitting as they're running and promoting financial inclusion? And what's your idea in terms of how the regulatory environment can address those challenges? So business challenges facing Kenyan businesses, and what could the regulatory framework do to actually mitigate that?
Those challenges.
Yeah.
So if we start with what are the challenges that are facing a lot of Kenyan businesses, especially in the digital space, because that's where I focus on.
Yeah.
So we have been spending a lot this year. We've done a lot as a nation to drive financial inclusion at an individual level. And we from Mshwari to your KCB M-Pesas to your Talas and so forth, all those were really consumer-driven credit. Of course, knowing Kenyans, they turned around, put the money in their business, but we had no sight of that. But we looked at it and gauged the score for the individual based on their repayment. And so we looked at it as how do we drive financial inclusion and credit access for the individual. But now this year we've been doing a lot to focus on driving digital credit for businesses. So we've built around about 5-6 products, some of it based on the M-Pesa till, some of it based on the bank accounts. Surprisingly, we are not even digitized, like Evah was saying. The fundamental problem is the spaghetti at the back of it. We call it spaghetti as well. The spaghetti at the back of at IT. That's why I say when they tell me of those uptime nirvanas, I don't buy it because I know the mess at the back. So when you're looking at the architecture and the layout, and you're thinking about how to frame the execution, you have a challenge of looking at it and saying, what are the enabling technologies I need in order for me to get to the point where I can actually say I can provide seamless end-to-end service. But I digress. Businesses,
the fundamental. I was about to say to you.
I've gone on the wrong. But don't worry. Here's the thing: when we say identity is an issue, even for businesses, identity is an issue. So we go to business registration services. We tell them, give us an API so that we can integrate with you and be able to see who the directors are and who is in the business, and therefore gauge the business, not the individuals. Unfortunately, of course, you have to look at the directors and then see based on their character. By that we mean willingness to repay, whether or not they'll repay their debt, right? Now, there's always that bad egg or apple in the batch who ruins it for everyone else in the business, so they can only access so much credit. We realize that we are moving from MSMEs, where we have over 1 million accounts in the bank, and it shrinks down to 70,000 because of various reasons. You find some of the directors in these businesses, or they have joint accounts, the mandates are not very clear. There is no place to actually check. Even for BRS, their data is very dirty. Our data is very dirty. So how do we then gauge how to define even a starting credit point? Because what you want to be able is to give some amount and then we can build from there. But it becomes a challenge when you cannot get proper, clear identification for the particular business. So inevitably, you hire an army and you send your 4,000 DSRs and you tell them, go register the person on premise, then we'll digitize after that. Right? Yeah, she's nodding heavily because that clearly is the only way to do it. Because there is no way to come at it and say, let me on board from a digital standpoint with small business owners. So you do the physical legwork. After you do the physical legwork, then you say, let me digitize. But where you found that kiosk last week, you can go there and you can find that they have cleaned out everything, plus the loan you gave them, and that kiosk no longer exists. So then, where do you go from there? And then they give all sorts of reasons. You find they are not willing to meet their tax obligations properly. Their books are not well kept. They don't separate financial and business records. So for the small business owner, digital access and credit access is quite a challenge because of level of knowledge, information, call it what you will. But there's quite a bit of challenge around that area. How the regulator can help us, perhaps, is by creating. Because what inevitably happens is when I want to do some of these products, like we built a product we call Worship 360, which is essentially for faith-based organizations. We don't care which faith. It's not our problem. That's why we call it faith-based organizations. Whether you want to be a Christian, a Muslim, I follow San Suu Hu, that's your call. Now, what we do is we say, you want to be able to track for that organization, we want to be able to track their congregants, we want to be able to track, we want to give them a means for them to digitize all their collections, all their payments, then based on that we can layer credit on top, right? And it's going to take time. But you find that getting people to open up and digitize, and we thought faith-based surely must be straight and narrow. No. So what we want from the regulator, for instance, which is the point. The regulator, we said, let us sandbox. Let us learn all we can and get that alignment in place. Now, I like the regulator on this front because of willingness to let you experiment. They say you can't advertise until I give you approval to go live, but I will let you. So all I want from the regulator, all we ask of the regulator is to create that conducive environment that James mentioned. Give us the opportunity to try, test, we will learn. I know M-Pesa kind of got away from them, but it's okay. I always say the critical thing for all regulatory people, because they are people, much as we don't think of them that way always, is that they must allow innovation and experimentation. And yes, sometimes it gets away from them, but that is just the price you pay for you to move forward and progress.
Okay, hold it there. So that's great. So that's where I'm worried about something, and I'll get back to you in terms of how many sandboxes can the regulator allow in the market, right? So
as many as the market.
But it's okay. It's fine. I'll get back to that. I want to go back to Evah. And Evah, you spoke about partnerships. Now, I want to just probe your mind in terms of how financial institutions, insurers, fintechs, and regulators can actually partner to promote financial inclusion through the various digital channels that are out there, while addressing three things: data sharing, protection, and privacy.
The difficult questions belong to Angela. Thank you. I think that's a really difficult question, but let's try and flip the coin as we partner before I talk to how we can do that, and also think about the customer as well. Why do we do all this? We do all this digital stuff for the customer, and we really must win their trust. So especially for us in the financial services and especially insurance, trust is a big thing. So you'll find that even if I put the most beautiful products on digital channels, the customers will still go like, I'm not sure whether you'll pay my claims and things like those. So we have a huge task even beyond just doing digitization into customer awareness, into customer trust, into actually ensuring that the customer can trust us. And mostly you find, as Angela was saying, I still have to have a physical, a human being go ahead of the digital channel to establish that trust, and then over time, of course, then you convert the customer. And to that extent, and in terms of data and all, this is very important that we also ensure that the customer is aware first of what their rights are, this data thing, it scares all of us, and to make sure that they understand the advantages of all this. For instance, when Mumbi is giving them credit, I'm sure they would not hesitate to give her data.
Yeah.
On the other hand, if they're not sure what the data is for, then they will not share it. So it's really our respective collaborative obligation to really educate our customers and to also then protect that data. Or if you look at us on partnerships, we really have to collaborate. There is no other way to do this. For instance, if you look at even when all these cyber things happen, no one will ever come out and say, hey, I was hacked, this is what happened, please take the learning and run. We are all like, we don't talk about it. Yeah. And what does that then mean? It means that next time, these same guys will come back and attack Britam the same way they attacked Company X, because we are not collaborating, we are not working together. If, for example, I'll give you a case. There's a time we did have an issue on our digital channels, and we had a fraud happening through SIM swap. How did we solve it? We had to work with Safaricom. We had to collaborate. We had to work together to fix it and close it. So collaboration in terms of partnerships is extremely important. Also, number two, when we collaborate, the customer will trust us more. If you say KCB and M-Pesa, I can tell you that there are more customers. Once you see two big brands there, there's a lot of trust coming through. There's a lot of synergies. We support one another. KCB will support Safaricom with the customers they have. Safaricom will bring their M-Pesa platforms there. If I'm working with Tala to give the customers insurance, I will protect Tala's customers. So when we collaborate, when we consult, when we share knowledge as organizations, even if, so that I can earn my lunch, even if it's for data, even for data sharing. And I'm trying to work with TransUnion, this is a true story, to try and sort of clean up my data, but then if I'm able to do that, then I've collaborated with TransUnion. I have my customer information on insurance, on savings, on wealth. They have the customer data on credit. If we can collaborate and our regulators can allow us a safe space to be able to do this, to one, create solutions that work for the customer, are relevant for the customer, then eventually the customer will see the value and all this digitization. And actually we can defeat fraud if we work as partners and customers.
No, that's true, because fraudsters actually work in concert. They don't work in solos, right?
Yes.
And that's true. By the way, we are beyond data as TransUnion. So data is where it started, but we are beyond data now. So we've got some amazing insights and solutions.
Correct.
But I appreciate that. James, the TransUnion State of Omnichannel Fraud report said that 64% of Kenyan consumers said that they abandoned their applications either for some financial solution they were looking for because they did not trust that their data would be safe. Right, 64%. Now, it might have been a financial thing with a bank or insurer, but 64% said, "No, I'm abandoning this thing." So, I just want to know from you, what can financial institutions do to promote trust and digital literacy education of consumers about safe digital transacting?
Thank you. And I think I had a number of them as I was thinking through this today, and I think Evah has mentioned if the brands are trusted.
Yeah.
You have your KCB and you have your M-Pesa, and they are trusted brands. I think that starts building a bit of more confidence in the consumer. I won't underrate or just not stop emphasizing about financial education, financial literacy. I think it's something we need to always just do, educate, and just educate. At times we think, we're literate, we've got a high number of people who can read and write in the country, but when it comes to financial literacy, you find people quite not well versed with one or two things. Number of questions I get during the extended family gatherings when I'm trying to enjoy myself and my whiskey is, how do I go about getting a loan, what bank account and stuff like that. Communication, I think, on do's and don'ts will always be something that we have to do. Again, I emphasize. I remember Gerald during his KBA days was promoting the Kachonjo campaign. I think we all know about the pin Siriako, it's yours, don't share it, and stuff like that. You'll be amazed about how the old people trust us so much, so they give you the card and the pin. I had a case as recent as last month where someone close to me lost almost about $1 million bob, and when I had the case, I told my elder sister, I think the culprit is just amongst us. And one, mom had given the card and the pin to this gentleman, and he was doing all sorts of things. She thought it was the bank.
Yeah.
Yeah. I think we always have to build trust. I think also Evah has just mentioned about that. We need to build trust, and one of the ways of building trust is when an online transaction happens, give the confirmation almost immediately. You recall how you also do your banking and you get your SMS and saying, yes, this is you and you did this transaction.
Yeah.
And if not, just call on this line, and hopefully our colleagues will pick.
Yeah.
Usually we hear customer service, the lines are always busy. But that confirmation, I think, also builds a lot of trust. I think technology, we always fear, and maybe Mumbi can just share. But whenever I hear a technology person speaking, I try and pick one or two things that a layman like me can understand.
Yeah.
So one of them is HTTPS and HTTP are different.
Yeah.
So the S means secure. So that's a site that I would, so these days when I go into the internet, I look and I say HTTP. Oh, okay, fine. Then now I can
trust it.
I can trust it. Yeah. I think quick resolution. I won't say which bank. I bank several, but I've been waiting for 3 months for a refund. For something that happened. I reported it, and they said 3 months. They told me a week. We will, and 3 months. I'm still waiting for the refund. So I think a quick resolution, keep the customer up to date with what you're doing, I think will also build a lot of trust. I think now and more we are seeing government entities also getting into the digital space. I'm following the Afri-Exim side of the business called PAPS. And when you see institutions like PAPS coming into the digital payment side of things and orchestrating just beyond the visas and the MasterCards, and you're seeing a government or a quasi-government type of entity doing that, I think it also starts building a lot of trust. I think word of mouth. Someone said something around metaverse. That was Sitoyo, I think. And I think if you talk more about the fraud, you just said, I don't know why we don't talk about fraud. It's like a taboo. No one wants to say I was defrauded. Angela will not tell me how much she was defrauded yesterday. I won't tell her the same thing. But I think we need to collaborate in this space and just talk more about it, and then we can try and beat the fraudsters at their own game. I think we've got tools. We've talked about KYC. I think Amaritha talked about KYC and AML and all these fraud management tools and stuff like that. I think we need to just embrace them and just ensure that the customer feels secure. And I think lastly for me is, since it's technology, it's driven digitization and everything, we need to just invest in secure systems and then ensure the processes behind are not spaghetti. But they are really robust.
Aligned.
Because behind technology is also a person. And people, even if we talk about RPAs and stuff like that, Mumbi, I'm getting there. Robotic automation, something. So even with that, there's still processes behind, and they need to be as robust and not that spaghetti. And I think this will give consumers more belief in online transactions.
And confidence,
confidence,
Okay. Look, we've got not so many minutes left and quite a number of questions, but we're going to go through them because you're going to be very cooperative going forward. Mumbi, the same report that I quoted said that about there was a 309% increase or rise in suspected digital fraud in Kenya since 2019. What's behind the increase, would you say? And do you think that fintechs are doing enough in detecting and mitigating threats like loan stacking, for instance?
Yeah, for sure. And also, let's take a minute to think about that 3 or 9% number.
Since 2019,
the first time I saw that, I had to sit with myself and say, there's an increase of 309%. That's a huge number. So also today I've learned a new word, smishing.
Yeah.
I was going to talk about it, but now at least I know the term for it. So I think when I think about fraud and what has affected us as Tala, it's always two parts. One is the smishing part, which is essentially SMS fraud. And then the other bit is what I don't know what the official term for it is, but essentially it's fraud where people are trying to access the product, but with fraudulent intentions. So I'll talk about the two pieces separately. On the smishing side, it's quite interesting. Every 3 months, I can assure you all, I get a message that tells me, hey, access your Tala loan from a random number, access your Tala loan and call this number. Which is, you can understand the irony of it.
Yeah.
Because I'm sitting there and I work at Tala and
yeah.
I get that message. So I try to understand how many people get those cons, and I do get a lot of family members sending me the messages. So that's a huge challenge. The saddest part is the only way to address something like that, to Evah's point, and also James, is actually collaboration. It's working together with Safaricom to figure out how do you stop that at source. But there's a lot of challenges with being able to get there. The discussions we've started.
Yeah.
The second bit is what I call the non-sexy parts. I'm not even going to talk about tech yet. It's actually just customer awareness. One of the things you'll notice today, we've actually started to do a lot of marketing to our customers and just tell them, put the text there and write fake. So that people can actually know that the only way you access Tala is through the app. The only way you access us is through USSD. And it's just a lot of that, very non-sexy customer education that you have to do. Then on the other side, around how people, people who try to access the product with fraudulent intentions, I think that's where we've honestly been very lucky being a tech company, because a lot of our AML and KYC is actually automated.
Yeah.
So two parts there. One, on the AML side, we leverage a company called Comply Advantage, and we're actually able to do, digital checks from an AML standpoint. However, on the onboarding side, which is KYC, and that's what the customer actually has to do when they're signing up, then it means we're introducing friction. Back in the day, before we were regulated by CBK, all you had to do is give us your phone number ID, we do an IPRS check, we're golden. Now, essentially, we have to do something called enhanced KYC, which means customer has to do a selfie, photo of ID. That complicates a lot of things because, majority of Kenyans have bad smartphones. How do you go around that? How do you go around the errors? And even with companies like Smile ID, which has really digitized a lot of this, it's still hard. It's not a behavior Kenyans are used to. If I was to do a quick poll here, who updated their digital ID and everything on their phone, and who went to an agent to do it, you'd find a lot of people went to the agent who did it for them. So that becomes a difference where you find, you still have to have an aspect of going offline to be able to actually update KYC and get the KYC that you need to be able to unlock customers to transact digitally. So this will still be some of the complications that we continue to anticipate and face. And it also comes with a lot of customer education. How do you do KYC digitally, and how do customers trust that they will take a photo of their ID and their data will be safe?
Yeah. Thank you. About 15 minutes. And Angela, you're next. So I trust you want to make it short, right? I trust you. So we all have a social responsibility to improve the quality of life and make a real difference in the continent, right? Just from your perspective and your organization, Angela, and the way you do business today, looking at that and the evolution of the Kenyan consumers, what would be your best piece of advice for creating a social impact, which is win-win for customers and businesses?
To create social impact?
Yeah.
You mean other than through the foundation?
You tell me. Quick one.
Okay.
Yeah.
So we have a foundation, we put about 1% of our PBT into it, 1.5% on a good year. This is not going to be a good year. And then we turn around and we try to enable businesses. So what we say is that, we are firm believers in the give a man a fish or teach him how to fish.
Teach him how to fish, yeah.
Yeah, so we teach how to fish. So we run a Tujiajiri program for businesses, which is how do we come in, help you build your businesses. We bring a lot of people, we do upskilling of youth. Mm-hmm. We have quite a number of programs intended to build, because our intention is you move them from people being run by the foundation and put them in the mainstream business, because you enable them to grow from just basic level. So that is usually our intention. We've tried some options of things like franchising, but it's a pretty new concept in Kenya, and it turned out to be very expensive when you're trying to do franchise for salons, for car wash companies, and so on. So we did a bit of burn your fingers there, but we are determined to figure out models, and we're working with close partners like USAID, we work with MasterCard Foundation, we work with all the big players to figure out how do we do it at scale, so that we can move people from working just with the foundation into mainstream.
Yeah. I get a sense that it's something that you've got to be also immersed in the community to understand what works, right?
That is where we run it from the branch, because there is almost every town in Kenya grew up around a KCB branch, or is it the other way around? Whichever way, either way, right in the middle of town, there's always a KCB branch, true or false?
Brilliant.
So, very good. So then, that means that what we do is that we determine that the branch manager is supposed to be the CEO of that area. Go figure out in your area what is the most critical need, and how do we drive what the community cares about. Because it's that same thing of, do you make the shoe, then teach people to wear the shoe? So we tend to tell them, go find out. Yes, we have these programs, but what is it that the community really wants the bank to support on? And then let's figure out how we can then bring other partners on board to help support that.
Brilliant answer. Thank you. Evah, coming back to you, your view into the future in relation to financial inclusion from an insurance perspective. Where is the opportunity?
Okay, thank you.
Yeah? Not a difficult one, is it?
Yeah? How many minutes? 2 minutes?
2 minutes.
Okay. I see it in two ways. First of all, insurance, our business is to cushion people from the shock that happens after they've done all those things. You've invested your money, you have a building, you have a car, you have many things, you have children, and what we do is just make sure we cushion you from any unexpected shocks. And therefore, when you look at financial inclusion, we are almost the next thing. And so into the future, what we see as Britam and what we are betting hard on is to say, yes, we've really mitigated those shocks for, if you like, upper middle income kind of customers, and now we are going a notch lower. We are using technology, we are using digital to take insurance to every customer, to make sure that insurance is affordable, because you can use technology, you reduce the cost of distribution, to make sure that it is accessible. That is where the partnerships come about, and to make sure that we are solving for the problems of our Kenyans and the countries and the markets we operate. For instance, we are now into flood insurance. We are getting into climate insurance. We are trying to get into insuring our gig economy workers. We are getting into insuring moments, so that if you're taking a bus ticket, then I can put for you insurance in that bus ticket. Because then I can use digital. Then it is affordable. Then when you have a claim, then you can use digital to get your claim reported and paid on time. So we are seeing that digital will help us access markets and underserved markets that we could not go to before.
And make it affordable.
Make it very affordable. And similarly, because we are also an investment company, we run an asset managers company, we are also working to make sure that we teach customers how to save, how to invest. And again, using technology, we make it very simple and very easy, and collaborating with other partners. Finally, the regulator has been good. He's now giving microinsurance licenses. Britam we have applied for a license for microinsurance. That will enable us now to take insurance, because then you can actually distribute it even using, for example, M-Pesa agents. You can take insurance to the customers. Yeah. The customers do no longer need to look for it. We can go and take it to where they are. So the future is promising. And because we can't do it alone, that's why we have partners, both local and global, to make sure that we can achieve that dream.
Yeah,
Thank you.
We're going to help you do that, right?
Yeah. Yes, for sure.
We're going to help you do that. James, quick one. In your opinion, I said 84% is the financial inclusion rate currently in Kenya. What remains to be done to drive it even further?
So I think two things.
Yeah.
I'll answer it in two ways. Inclusion and interconnectedness.
Yeah.
Yes, I think has enabled payment growth. I think now we need to see how it can drive, savings. Savings will drive intermediation. It will drive borrowings. It will drive growth. It will drive a lot of ecosystems to develop and emerge. So for me, I think inclusion now needs to go just beyond payments. I think the payments has gone well in Kenya, and I think if I saw what M-Pesa is doing in Africa, I think it's driving that. I think for me the next big social impact thing is just what I've said about borrowing, is the ease of credit, ease to access credit. For me, credit spurs growth. It's one of the core factors of production. If I remember my economics, Gerald, yeah. Yes, yeah. He talks a lot of English, but factors of production are four. And one of them is credit. And to produce, inputs, outputs, and we generate money. So I think ease of credit, ease of access to credit, be responsible lenders. Angela and myself, we need to be responsible lenders, educate, just don't lend for the sake of lending, together with Mumbi. And I think we'll be able to impact.
Push that number up.
Yes, and impact the social aspects of the community.
Brilliant. And Mumbi, I want to know, from a technology point of view, in terms of innovations or trends, they're going to shape the future of FinTech. What are they? What are the most critical ones? If you think about the future of FinTech, mobile payments, financial inclusion, right?
Yeah, I think I'm the only one who's here to earn my keep, so let me mention data.
Yeah.
So definitely data is still king, and that's also been a lot of our partnership in Tala with TransUnion. I think for us, being a tech company, it's around how do we leverage alternative sources of data beyond, just the normal transactional data, be able to feed that into models to help in our decisioning. And even as we were talking about fraud before, it's also a question of how do we leverage a lot of the learnings that TransUnion has and other CRBs have, and be able to feed that into our models so that we get better at detecting fraud before it happens. So that's essentially what we've been doing in the background. Beyond that, the trend I always like to talk about, and because I have Angela and James here, is the role of incumbents in the financial ecosystem is changing, and a lot of banks truly understand that. KCB being a good example, and what I mean by that is moving from a place where you fully own the customer and fully own everything, to opening up the server and being able to lend out different aspects of your business. And that's also true for us as Tala as well, where we're saying, hey, we're good at tech, we're good at underwriting. How can we truly open up the core capabilities that we have and be able to lend that out? And I do think Sitoya talked about that in the morning as well. Then the last thing I'll mention here is just around cost. That's a theme that came up today. And it's both cost of credit and actually cost of payments. Our personal philosophy in Tala is always payments is a race to zero. So figure out a way to ensure that customers can always make their payments at zero to low cost. And that becomes a true challenging task for a lot of people in this room that we always have to figure out. Then on the credit side, I think there's a lot of big innovations such as risk-based pricing, where we think about how do we lower the cost for the best customers?
Yeah.
And we've seen 33 banks actually go ahead and get, approval from central bank to do this. As Tala, that's always been how we've operated, where we're saying the best customers get, the best interest rates, and essentially we can hedge the risk with higher risk customers.
Yeah.
So in my mind, those are the top trends.
Key ones, yeah.
And last thing I'll mention is just around financial inclusion, and it's a lot of what James already talked about.
Yeah.
But that remains core. And back to my earlier point when we started, financial inclusion is always about moving to where the customer is.
Yeah.
And it's less about the fancy tech, is how I always put it.
Yeah.
A good example is Annstella. We literally went back and are now, having something like USSD to be able to reach customers who don't have smartphones.
Reach them where they are.
So it's essentially just move to where the customer is and then be truly, built for what the customer needs.
Brilliant.
Yeah.
Thank you so much. This has been an amazing panel. Thank you. Round of applause, everybody. I just want to thank you all, James, Evah, Angie, and Mumbi. You've been amazing. Thank you so much.
Thank you.
There might be a few questions. My suggestion is, I want to introduce my boss, and his CV is very long. So we're going to sit at lunch and have a chat with all these people. You can ask them all these questions, right? My bonus depends on me reading his CV properly. Okay? So if I do that, then I've actually earned my keep. Thank you so much. You've been amazing.
Thank you.